Hi students, in the last class we saw the how to prepare the purchase return book or the sales return book or the purchase book, sales book. Okay, so we finished all the that. Okay, so in this session now we will see the depreciation. Okay, so part is the depreciation. So now see what by depreciation. It is nothing but decline in the value of fixed assets. Depreciation is calculated on fixed assets. Okay, so the depreciation is means what? To reduce the value of the fixed assets at the every end of the year. Okay, after using 1 year we have to reduce the value of the fixed assets. Okay, and the way depreciation is calculated on the fixed assets. So you know that which are those fixed assets. Okay, so fixed assets are first one, fixed asset is the building, land, machinery, furniture. These are the fixed assets. Okay, and at the end of the year we have to reduce the value of that fixed asset. Okay, because we 1 year used that. Okay, so now see the features of depreciation. So what's the feature? First one is what? It is calculated only on fixed assets. Okay, so this depreciation is calculated only on the fixed assets. Okay, so next, it is calculated at the end of the year. Okay, it is calculated at the end of the year. Okay, so this depreciation is calculated at the end of the year. Okay, end of the financial year. Okay, so next, it is the loss of depreciation is to be transferred to the profit and loss account. Okay, while preparing the balance sheets, at that time we require to prepare the profit and loss account. So in that profit and loss accounts we have to transfer in the debit side. Okay, of the profit and loss account, whatever we ascertain in the depreciation, so this depreciation we have to pass in the debit side of the profit and loss account. Okay, so now see types of the depreciations. There are two types of the depreciation: straight line or fixed percentage method, and a reducing balance method. Okay, straight line method means what? On this method depreciation will remain same every year, therefore is called a fixed percentage method. Okay, so it means what? Suppose if it is one purchased a machinery, okay, and for that long time purpose. Okay, so suppose 1 year finished on that 1 minute rupees, suppose the machinery price is rupees 5 lakh. Okay, machinery price is rupees 5 lakh, and at the end of the year we have to reduce the 10%. Okay, so 10% of this 5 lakh is the 50,000. Okay, if it is 50,000 you minus from this 5 lakh, remaining what? 4 lakh 50,000. Okay, so the 4 lakh 50,000 it will be the opening for the next year. Okay, again the next year after will be the finished 1 year, then we have to take the 50,000, because the 50,000 is the fixed depreciation value. Okay, like this you have to just, while we will solve the problem we will understand this. Okay, next, reducing balance method. Depreciation is calculated on reducing values every year, is called a reducing balance method. Okay, so whatever the reduced the values, on that reduced value again we have to calculate the depreciation, percentage of the depreciations. Okay, these are the two types of the depreciation: straight line method and the reducing balance method. Okay, so now see the problem. This Hindustan's Engineering Limited Mumbai purchased heavy machinery costing rupees 5 lakh on 1st January 2005. The rate of depreciation to be charged was posted at rupees 20% per annum. Write up machinery account for your years ending 31st December 2009 under equal installment method. Equal installment method means what? The fixed method or the straight line method, and the next one is the diminishing balance method. Diminishing balance method means what? The reducing balance methods. Okay, so now see here, 5,000 is given. For this 5,000 5 lakh is there. So this, on this 5 lakh we have to calculate the 20% depreciation till 2009, December till 2009. Okay, so now see, with the help of this straight line methods we will see that problem. So now see this, like this you have to draw the format like this only. The ledger accounts, whatever we prepare the ledger accounts format, you have to follow the debit side and the credit side. Okay, the debit side is the column is the date column, particular column, amount column. In the credit side, date column, particular column, and the amount column. Like this you have to draw the chart. Okay, so now see the assets under the equal installment method or the straight line method. Okay, so the machinery account, so the opening of the machinery account, it's on which date? On 1st January 2005, rupees 5 lakh. Okay, so it will come under the debit side. Okay, debit side of the machinery account. Okay, so now see the machinery account. So the debit side, put here date on 1st January 2005 into particular columns to bank account, amount is rupees 5 lakh. Okay, so now this it is start from 1st January 2005, so it will end with the 31st December 2005 only. Okay, so this put here ending date on the credit side 31st 2005 by depreciation. Okay, so after using 1 year we have to reduce the value of the 20% is given in the problem. Okay, so reduce the 20% of this 5 lakh. So calculate the 20% of this 5 lakh rupees 1 lakh. Okay, 20,000 rupees 5 lakh, it's a 1 lakh rupees. Now, so which side is getting more balance? Debit side or the credit side? Debit side is getting is more balance. Okay, take it 5 lakh here. So as it is keep, it is in the credit side also 5 lakh. From this 5 lakh you have to minus this 1 lakh, and so the remaining balance is rupees 4 lakh. So this 4 lakh is nothing but the balance carried on for this 31st 12 2005. Okay, so 31st 12 2005 by balance carried down, it's rupees 4 lakh. Okay, so now it will be the opening for the next year. Okay, up to December we have to calculate. Okay, so now this by balance carried down 4 lakh, it will be the opening for the next year. Next year means for the 2006. Okay, so now see here on credit side, debit side, 1st January 2006 to balance brought down is rupees 4 lakh. Okay, so now it will be the end on which date? It will be the end on 31st 12 2006 on the credit side. Okay, 31st 12 2006. Again we have to depreciate, and it is the fixed. Okay, balance is now fixed, depreciation value is fixed. Okay, whatever we calculated on first year rupees 1 lakh, it will be the fix up to December, up to the December 2009. Okay, so in this year also the same value rupees 1 lakh. Okay, so now this 1 lakh we have to minus. Okay, so now see, so 4 lakh, which side is getting more balance for this year? So debit side is getting is more balance. 4 lakh as it is keep here, take it in the debit credit side 4 lakh. So from this 4 lakh we have to minus again this 1 lakh, remaining balance is what? 3 lakh, and so this 3 lakh it will be the closing balance for the 2006 purpose. Okay, whatever the closing balance for the 6,000, it will be the opening for the next year. For the 2007 it will be the opening. So this opening balance again we have to take in the debit side. Okay, so now see 1/1/2007 to balance brought down rupees 3 lakh. Okay, so now on this year also again we have to calculate the depreciation. Okay, so now see on this 7,000 it will be the closing on 31st 12 2007. Okay, again we have to reduce the depreciation value. Okay, and depreciation value is a fixed rupees 1 lakh. Okay, so take it 1 lakh here. So which side is getting more balance for this year? The debit side is getting more balance rupees 3 lakh. Take it as it is, take it in the credit side also as it is. So from this 3 lakh we have to minus this 1 lakh, remaining balance is rupees 2 lakh. Okay, so this 2 lakh is nothing but the its balance closed carry down for the 2007. Okay, 31st 2007 its balance carried down. Okay, so now this balance it will be the opening for the next, okay, year. It means 2008. Okay, so it will be the openings to balance brought down to rupees 2 lakh. So again we have to reduce the value on this year 2008. So fixed value is rupees 1 lakh. So this 1 lakh we have to minus from this 2 lakh. Okay, so 2 lakh as it is taken the credit side. So from this 2 lakh we have to minus this 1 lakh. Remaining balance is rupees 1 lakh. Okay, so see here it will be the opening for the next year 2009. Okay, again this on this 9 on this we have to calculate the depreciation is the fixed rupees 1 lakh. Okay, so by depreciation amount is rupees 1 lakh. So which side is getting more balance? So both the year is getting same balance. Okay, so the debit side is also rupees 1 lakh and the credit side is 1 lakh. Okay, the value will be the after reducing the value, the machinery, whatever the machinery will be the damage. Okay, it will be the scrap. Okay, so like this we have to solve the fix the method. Okay, so in the next class we will see the reducing balance method. And keep in mind it's very important for your exam purpose, for the internal exam as well as for the main exam. Okay, so it will come for the both the exams. Okay, so I hope you will get understand. If it is not understand, you can contact me or message me, I will help you. Okay, so thank you.